do you make of the remarks given by the Vice Governor of the People's Bank of China, Mr. Yi Gang, over the weekend about the RMB? Is it likely a message that China might intervene in the foreign exchange rate?
Well, actually, I don't think the government will be intervenes this adversely, since actually the currency just stick this I think it's equivalent the price and adjust to the internal and external the changes like election in the States and also in China. That's the economy, these the PPI and the inflation and also the profit of the enterprises. That's reflect in the market. And I think for the currency, that's the step with the basket of currency. They just adjust to the whole world change.
So my question to you really is, Professor, is China's central bank going to intervene?
I don't think this will intervene and adversely, and but. I think China's mechanism that will be they will monitoring this trend.
All right, let me go to Mr. French. What do you think, sir, of the downward trend of the RMB over the past few months? So what do you think are the reasons behind it?
Yeah, so I think there are two sides to this story. There's the dollar strength story, and you mentioned in your introduction the fact that a December increase from the Federal Reserve is now fully priced into the market, and we've seen a strong dollar, both on anticipation on that and anticipation of higher growth in the US. But then domestically in China, I think there's been a conscious decision to weaken the yuan to benefit Chinese exporters, and also a very rational reaction from Chinese corporates, Chinese households to diversify their holdings out of yuan into other currencies, which is consistent with the move towards internationalization of both the currency markets and capital markets.
Is it a conscious decision?
Yeah.
Is it a conscious decision?
I believe it is a conscious decision.
Let me ask the Professor Zhao here in Beijing to respond to what you have just said. Is it?
Yeah, that's
a conscious decision to depreciate? Is that what you're saying?
No.
Okay, let's go to Professor Wolff in New York. Sir, some specific numbers Chinese economists argue are suggesting different directions of the RMB in the near future. PPI going up, industrial enterprises, their sales coming up, and meanwhile, people have also been suggesting the ability of enterprises to pay back the interest of the loans that they borrow. Will these realities, factors of the real Chinese economy, be able to in any way impact on the exchange rate?
Sure. So great to be here. Look, I think in the longer term, the exchange rate should be set by the conditions both internal to China and China's position in terms of their conditions relative to other national economies. Since 1971, we don't see currencies moving around based on gold. We broke the gold standard. So it's the full faith and credit of the government that issues that currency. That bodes well for China. In the short term, I don't think the renminbi is trading much on China news the last 3 weeks. I don't think most currencies are. I think what we're seeing is a U.S.-led, Western-led effort to price the best possible case scenario with all things you like being successful of a new Trump administration and all things you don't like never happening. And one of the things that's doing is pushing up the U.S. dollar and pushing down developing country currencies, and particularly pushing down forecasts for major exporters on the notion that we're going to have a America First Trump presidency with a less free trade environment, and we're also going to have rapid, sustained growth in the United States. Ironically, the outperformance of the U.S. is actually a bit undermined by the cheapening of developing country currencies. But I think the Chinese currency story short term may continue to be U.S. policy, but long term it will, and it must be the robustness and the growth, which is still an essential piece of the story in China.
All right, let's talk about the short term first, if developing on your theory, Professor Wolff. Professor Zhao, shall we address that question to you? Because Mr. Trump, the presidential-elect in the U.S., during his campaign, talked about China as a currency manipulator. That is a big accusation, by the way. Of course, when he's coming into the power, we see a very different Mr. Trump, including the selection of his key cabinet members. We see Commerce Secretary and many others who are big gurus from the Wall Street, very different from his nationalist rhetorics earlier. So let me ask you, to what extent is China's policymakers, are China's policymakers concerned about the pressures coming from the United States, political-wise, when it comes to China's own currency rates?
I don't think the Trump will be trigger the trade war when he is sworn in, but we cannot change the manufacturing structure overnight. So that means the relationship, the trade relationship between China and the U.S. will be, I think it's sustainable, but will be some change, but it will not change overnight. So I don't think there will be the tariff on China, and also force China to appreciate the currency, since they say they're trying to manipulate our currency. So I think we still have a time, and actually there is a very good communications channels between China and the U.S. as the government level, and even other channels to discuss and the cooperation from China and U.S.
So in one word, if I could sum up what you have just said, is that there is no immediate danger that China will be under great pressure politically from the United States, even with the new president coming into the power. And by the way, the trade structures between the two countries are not likely to change overnight. Therefore, it will remain what it is, and we'll still try to figure out how to work between these two countries. Let me come to you, Mr. French. From your perspective, how much of the exchange rate regimes will be influenced so much politically during a Trump era, and particularly between China and the United States, and China, and U.S. and some of the other major economies of the world?
Yeah, I think I'd associate myself with Professor Wolff's comments around where currently markets and the exchange rate are pricing the idea that all of the good stuff that capital markets like around the Trump economic agenda are going to be implemented, and all of the bad stuff, the challenges to globalization, the labeling of China as a currency manipulator, is not going to happen. I think that's at best wishful thinking, and at worst quite dangerous. I think some of the appointments that we've seen to the Trump administration suggest that some of the rhetoric during the campaign is going to be followed through with appointments, but I think Mr. Trump will get very quickly an understanding that he cannot influence economic conditions around the world. And actually, since he has become president-elect, the strengthening of the dollar has made it harder for US imports, and actually the yuan hasn't weakened nearly as strongly as other major currencies. Actually, the sterling is probably one of the only other major currencies that has held up well against the dollar. Pretty much everyone else, including the yen, has actually devalued by much more.
That, of course, is the relations between the RMB and the dollar, China, United States, how much it will play in terms of China's exchange rate. But what about in other cases, Professor Wolff? At this moment, we got the news coming from SWIFT. They have a RMB tracker, and that has been suggesting the use in international trade of RMB has been declining over the past 2 years, since 2014, now to about 1.67% of the overall international trade. So what does that say about the attractiveness of the RMB, and also exactly the opposite direction, it seems, of the expectations after China's RMB joined the IMF special drawing right basket?
Yeah, so I think that what we're seeing here is that short term looks like it's heading in a different direction than we think the secular long-term trend is. I also think that the role of the Chinese wealth in the global economy is poorly proxied by the use of the RMB. One little example being just historically Bitcoin, the sort of new crypto digital currency. My understanding is the vast preponderance of its international use is originating in China, and so that's probably monies that might be in the RMB if it weren't for some changes to the system here. So we would expect that to rise. We would also expect the prominence of China diplomatically, politically, possibly even militarily inside East Asia to rise. One thing that the markets haven't factored yet and the currencies don't reflect is part of what the Trump administration promises at least have been, and some of the appointments suggest some validity too, is this notion that the United States is going to withdraw more and be less internationally minded, and that will leave a freer space to rising powers. And there is no more rising power on Earth than China. So we would expect that to catch up more or less. The diplomatic power and the currency usage around China may begin to catch up with its huge status as a global powerhouse. And then the other thing I think we might look at about decline RMB might be a little bit about commodity prices as well.
Before we try to figure out what other countries might do to their own policies, for example, the United States, because China cannot dominate that anyway, let's try to figure out what China's own policy could do in terms of the RMB exchange rate and the popularity of the RMB. Mr. French, Belt and Road Initiative is one that has brought up by China, building infrastructures around the world. Of course, RMB in terms of trade and also infrastructure building very much encouraged during this process. But how much will it mean for the RMB exchange rate right now? As we know, these initiatives could be long-term rather than short-term.
Yeah, I think you're right to bring up the One Belt, One Road initiative as an important juncture on the internationalization of the yuan around the world. And actually, very much China's response to what was, I think, unambiguously a slowing economy at the back end of 2015 was a big infrastructure spending program, both in the short term and on longer term programs. And actually, the rest of the world, developed world, is playing catch up with what China has done on the fiscal side of things to support its economy. And actually, this embeds the trading infrastructures around Asia and over into Europe, which I think will only benefit. And actually, the long-term usage of the yuan, and as it moves towards reserve currency status, is very much in the trajectory of that One Belt, One Road initiative.
Professor Zhao, what do you think?
Well, the renminbi, we have achieved the milestone we entered into a special general rise, but the long way to go. Actually, on one hand, China, we need to improve the infrastructure for RMB internationalization, especially the SIPs, for the cross-border interbank, settlement with this system. That's just the first stage, and then we should upgrade this. And on the other hand, use the RMB for the long-term investment, and especially for One Belt, One Road investment. That should be renminbi. Currently, we still use US dollar and other currencies, so that will be swapped to this, and extend this project to some the partners in the Belt Road, and especially for some of the developing economies. So that's will change the anchor of that.
Well,
yes.
Will it though, Professor Wolff? Because the U.S. is also talking about the infrastructure building with the Trump administration coming into the office, but how much that will be done, where the money come from, all are unknown. Is there any chance of cooperating? If there were, would that mean a new possibility in terms of the use of the RMB and the US dollar?
Yeah, so I think we could see cooperation, not just between the United States and China, but also between China and the European Union, and China and other emerging states in East Asia might also make a lot of sense. I think part of what we're seeing right now is in the short term, we've had a very sharp strengthening in the dollar. That makes everybody less interested in holding other currencies that have fared less well, and that creates at least some risk around the world that there are more capital controls coming in for people to variably control the movements in their currency a little better. This is not so much the case in China, but there's also a feel globally that there's going to be a bit of a rush to high quality assets because the world looks a little bit more unstable and trade looks a little bit more impacted by various nationalisms, particularly but not exclusively in the West. And so I think you're seeing a little bit of a reshift around. I think when that settles out, we'll go back to a general stance, which is quite constructive for the RMB. It's also true the RMB could pick up some market share globally because we do anticipate further troubles in Europe as the future of the EU gets sorted out by a series of referendum and elections beginning in a few days and really lasting for the next year.
Right. The RMB was included in the International Monetary Fund's special drawing rights basket last month. That is being considered in China at least a milestone for the internationalization of the yuan. Right now, more than 100 countries are now using the RMB for payments with Chinese mainland and Hong Kong. Among them, 57 countries use it more than 10% of their credit payments by the value. And also we see the RMB stands ever more active in the currency global trade finance, as we mentioned earlier. But the real question is, what about that, Professor Wolff? How much of it really is an indication of China's real financial reforms? As we all know, that is very important in China's overall reform scheme, and that is also very important for the real long term of the RMB exchange rate.
Yeah, so clearly there's a general sense that there's a trajectory of openness and integration coming out of the highest levels of Chinese decision making, and that's fairly consistent. It does take a while to use currencies. I would give the example of the United States would have taken much longer to supplant the pound sterling had the United States not taken advantage of some difficulties encountered by the British financial authorities during World War I. So currencies tend to outlast the empires economically that birthed them, and new currencies have a tendency to take a much longer to grow up than we might expect from a macroeconomic basis. So what we're seeing in the RMB is the right trajectory. It is just a slow process, and perhaps because the Chinese growth story was so explosive and fast, we assumed the currency would follow that pattern, but the RMB is actually following the slow pattern of a rise in currency as we've seen it before, which tends to be much slower than some of the other macroeconomic indicators and things that we look at.
Mr. French, speed and impact.
Yeah, so in terms of the speed, I think the transition towards becoming a true global reserve currency, a lot of the responsibility sits with the People Bank of China and their forward guidance. I think that's a very important point in terms of what the policy trajectory is for the exchange rate targeting regime with the US dollar, and actually with the much broader basket that they're now targeting now. That'll be key for investors to understand what are the risks associated. And the more forward guidance that can be provided, the greater the share of global trade that the RMB will be able to capture over time.
Professor Zhao, final question for you. There has been a lot of talk about the capital flight from China, and there has been a lot of talk about the diversity or diversifying the investment opportunities for Chinese companies and individuals overseas. How are they now, with the recent changes tied to the RMB exchange rate fluctuations? What about in the near future, Professor Zhao?
Well, I think in the near future there is still I think it is the allocation of the investment. There is the fear about the depreciation. So that's there is the spur the demand for the foreign exchange, and also the outflow of that. And so the problem is those who demand the currency, well, they didn't create the foreign exchange, and that's in the short term it spurred the demand. So that's the pressure for the depreciations. I think now there is a way to monitor this and to cool down the irrational demand for that. So you have buy the insurance in Hong Kong, then you just fly your wealth to Hong Kong. So that's way has been stopped, and I think back to the normal. You have the normal expectation that there will be the outflow of the investment in the form of the investment that will be slowed down.